Hi, welcome to the Price Action Analyst YouTube channel. This is a quick update on two options positions that I've taken recently. This is Alibaba. I'm still in this one. This is a call debit spread, so I bought the I think it's a 222.25 option, and I sold the 225 option. So I got in just before the market closed on this day, which was the 9th. So let's say that's at about 220. And the reason for doing that was that this was like a consolidation pattern. So price had consolidated, it had come outside of that, and then there was buying support here, and it had come inside, tested the low again, come back inside, broken out, come back inside, and then shown strength off of that. So you know, that second breakout is much more reliable, and you can see that the buyers were more convinced than they were here. So on this strength, you know, there's a trend line here. Price had retraced, or was retracing here, and then you had more strength. And so on that strength, my sort of expectation was off that strength to get a shallow retracement, because I could see at the end of the day that bar was going to close at near its high. So that's like a bullish engulfing, which means price is normally going to go keep going the next day, which it did, but not very much. So, you know, given that strength, my expectation was for price to come and test this line at least, but probably push through it and test this high and maybe this high, or sort of in between them. So my expectation is for price to still come up to at least the 228 level. So I kind of, this is, I guess, a sucker's rally, because I bought here, the next day was good, and then the market dipped and price came back. But it was positive that price held this trend line here, and on this, when we had this day of strength, well, I was increasingly hopeful. Like this day, I was kind of thinking about getting rid of the position, but then this day left a wick, so there was buying pressure here, and then this day was you know, a buying bar, and it had respected this line. So I was kind of hoping and expecting that to happen. So price is still moving in my favor. This wick here is not ideal, but hopefully, you know, either today or tomorrow price will push above that. If it pushes above that, it should run a little bit. So I think that spread cost me 1.03, and I think it's currently at about 1.25. So I have an exit order for 2.1. So when price gets up to 228, 229, the midpoint between these two peaks, I'll watch price action and see how close the value of that thing is to 2.1, and then I if it shows any weakness there, I'll look to exit. So that's BABA. That's how I'm playing that. That was my read of the price action. I kind of got suckered there, but you know, this is still kind of a classic fish hook, so you generally see strength off of that. So I'm hoping that the strength will continue to push up into that area. The other position I had was Amazon. So I got out of this trade for a profit. I just wanted to show my exit because I was kind of happy with it. This price had poked outside the Bollinger Band, left a wick, and I got short. Just like, ideally you want to get short in the wick, and price had just moved sort of below, and I got short here. That was a put debit spread with the exercise. The red lines are my exercise prices. So I went 1, 2 days, and on the third day I exited. So price went in my favor, down, a retest or retracement there and down. And so I had this trend line here, and there was a one on the bottom. So what happened here was price started to show strength here. It sort of was making this line. It showed strength, and I believe my exit might have been kind of just before, because with this strength, I didn't like it. But anyways, at last case scenario, as price broke out of that trend line and then retested, and as soon as it started to show strength there, that was like the last place to get out. This is the breakout and the retest, and strength is indicative that price is going to push up from there, because it's basically that's the signal of the end of this downtrend. And so yeah, I think I paid 2.5 for that, and I sold it for 3.4. So it was a $90 profit on a $250 trade. So again, I like that exit. It's hard to do because you're always hoping price will roll over, but I pressed the exit button. It was the right thing to do. And you can see if I held it, price would have pushed against me, and so that would be worth less than $250, probably worth less than $200 right now. So I took a small profit on that. I think that was still a 35% profit, so that worked out all right. But the main thing is there that that push outside of the Bollinger Band and then selling weakness is a very reliable indicator that you're going to get some weakness. And to be honest, it's very, very it's high probability that as price pushes up into this wick, you're going to see weakness again. Even so much so that you could look to hit another short at around 2720 if it gets there, but 2710, even 2700. If I'm going to hit that, I'll watch on the intraday. you know, 5 or 10 minute bars, as price gets up into that 2700 level, if I start to see stuff like that, I'll get short. You know, there's no reason to get short there because you don't have the other prevailing high. But if you know that that previous high was 2720, as price comes into that level and you start seeing, you know, big wicks, anything that indicates that price is going to retrace, that's where I would take the ideal short entry off Amazon. So I might look to do that when it gets back up there, is to hit something like that again. But we'll see. I'll keep you posted. I'll watch what price action looks like as it gets up there. Anyways, hope that's helpful. If you have any questions, please feel free to leave them in the comments, or if you have any things that you'd like me to look at, I can give you my opinion. Please hit the like button and subscribe if you want to see more videos. Thanks for watching.